So my dear friends, happy day. So let's continue with this topic, insurance claims. As usual, we will do the recap exercise. We are into 4th lecture now, still on to claim for loss of stock. I've seen people can complete this topic in 5 hours time, 6 hours time. In fact, sometimes there are places where you find the insurance claims as a chapter will be completed in 10 hours or so. So I take roughly around 24 hours. So some 20 to 25 hours we spend on to this chapter. There are two things. One is we are slowly getting accustomed to each other. In fact, you are not there in front of me, but still. But the way of learning, so you are getting slowly accustomed to. Not only that, substantial part of the syllabus, it will be the same manner. I want you to understand conceptually, and then you need to refine yourself into academical mode, which means examination mode, etc. So both the ways we will consider, my dear friends. So initially the learning has to be conceptually, and then we can create steps, step 1, 2, 3, 4, but that's not the way to learn a chapter. That's certainly not, because that's not going to give you a practical connect. So we discuss in a general way, layman's approach, and thereby take some time. Introduction phase and all. You should genuinely learn, you need to understand this chapter rather than merely secure marks, etc. I don't teach only from the perspective of an examination. That is one aspect. Anyway, you should be understand me as well as I will also try to understand a student's mindset, what they require, etc. and all. So anyway, so the recap exercise, you need to participate, fill in the blanks you should convey, or along with me you should show some energy so that you will have very effective learning in the lecture, throughout the lecture what we are going to take. So I told you, slowly, steadily the recap will reduce, the timing will be reduced, but still recap will be there. This chapter, insurance claims, the first session, blah 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 blah, CA, dignified premier profession. So we have 2 horns, etc. blah 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 things. So now on to the term insurance claims, introduction, ocean to bottle of water, blah blah blah. Now it is learning objective. What are we learning in this chapter? In this chapter we are learning, my dear friends, claim for loss of stock, claim for loss of profit. There was one problem in fact involving claim for some furniture lost, etc. But it's not a big issue to calculate furniture whatever we had, so that can be easily understand from the opening book value. So there is no much calculations involved, so thereby some common sense and some additional part will be given. Similarly, you can't tell it is out of syllabus, etc. and all, but primarily it is covering only claim for loss of stock and claim for loss of profit in a fire insurance policy from the viewpoint of insured. So visualize like this: I took a policy, and if I had a fire accident in my place and I lost stock, I should intimate the insurance company about the fire accident and about the stock that I have lost. So how much stock I have lost, what I am expecting you to compensate me in accordance with what we agreed upon, I should only tell. You may verify. I should make the calculation. So from my viewpoint, I should learn how to calculate the claim for loss of stock. Like that we discussed. I need to prove how much stock I had on the date of fire. Before the fire date, how much stock I had. So how do I prove? By preparing some statement. We discussed several statements. We finally zeroed in onto one statement, which is trading account. Very simple information. It's like sales, cost of goods sold, profit. This is a very simple concept. I purchased 100 units. I sold 80 units. Usually trading activity is that I bought 100. I sold 80. So in this, what is profit? Profit should be generally booked on 80 units only. Sold 80 units. Cost of 80 units I should take, and I will get profit. So whatever I have not sold, 20 units, I should reduce from that particular purchases. Instead, I can show it in the credit side. So there will be a balancing. So sold 80 units, unsold 20, purchased 100. So you can arrive at profit. This was the fundamental concept of trading account. Anyway, you know it much better. So you can do in a statement form also, my dear friends, finding out this trading account, profit, etc. But here we will fix the profit. Usually trading account, the profit will be determined. You know the closing stock because you can physically count the closing stock, physically value the closing stock. Other information like purchases and sales, opening stock is there in the books information. As because purchase is transaction, sales is transaction, it is accounted, everything is there in the books. Closing stock is generally arrived by physical stock taking. Like that we arrive at the profit figures. Here we do reverse. We will fix the profit by estimating the margin and we will take the profits. We will have opening stock, we will purchases, sales, etc. So then we can arrive closing stock as balancing figure, which represents the stock on the date of hire. This was our basic concept. Then these information, how to ascertain, I told you various sources, etc. So once we find out by preparing this trading account, stock on the date of hire, for which one important item we require is the gross profit ratio. So thereby first focus was GPR, then stock on date of hire. Now this is the stock I had, but after fire accident, this is what I have. Still I have this much stock. If that be this case, balance is what you have lost. So loss of stock is equal to stock on date of hire minus salvage value retained is very important, my dear friends. Then we discussed about claim part. As far as claim is concerned, you got so many charts like and all. Simple, my dear friends. Partial loss or complete loss? You should check whether it is complete loss or is it partial loss. If it is completely lost means, then it is simple, straightforward. Loss, policy amount, whichever is lower. Partial loss, my dear friends, even there also straight away you can apply the principle and all, but in one situation you should apply average clause. When first partial loss, then policy mentions about application of average clause. Not only policy mention, but you also find that the stock is underinsured, then only you will apply this average clause. So in that case, loss of stock into policy amount divided by stock on date of hire. So all the conditions should be satisfied. Otherwise, always you compare these two values, loss and policy amount, whichever is less, always you will be getting the same answer only. Instead of 4 charts, I will put it like this. One scenario, apply this formula. All other scenario, dash or dash, whichever is less. Correct, Abba? Which scenario? Average clause, partial loss, policy mentioned in that, policy mentions about average clause, and the stock is underinsured. Then only will apply this. All other cases, dash or dash, whichever is less. Loss, policy amount, whichever is less. Simple, ba. Okay. So finally, we discuss this conceptually. Now 4 steps. What are the 4 steps? GPR, stock on date of hire, loss of stock claim, GPR. So though we discuss all the 4 steps, GPR, today we are going to focus some issues on to computational GPR. Last class only we have started with that computational GPR. Today we will substantially discuss about some GPR issues. Treatment of abnormal items in GPR, treatment of abnormal items in stock on date of hire, step 1, step 2, abnormality effectively we are going to focus today, my dear friends. So that in one more session we can conclude on to this particular topic. Anyway, proceeding further, my dear friends. So, gross profit ratio may be given in the question. What do you mean by given in the question? The businessman knows the GPR. So, it is there in the question. Take that GPR. Sir, GPR of 2 or more past years given. Take average. Sir, GPR is not given. So, then what you should do? Prepare trading account of previous year. So, the current year trading account will be called memorandum trading account because most of the informations are estimated. But the previous year trading account, actual information I have, and therefore it is called only trading account of previous year. You take opening stock, you take purchase, you take sales. Will you take closing stock? Yes, you take closing stock also. You are a what as balancing figure stock? No, profit as balancing figure and express the profit as a percentage of sales. Like that we told. Correct, Appa? Similarly, we also told, my dear friends, in that preparation of trading account, if you have some abnormal items, effect of such abnormal items shall be eliminated. So, if you have some abnormal items, abnormal goods, effect of such items shall be eliminated. Similarly, whatever you are finding as GPR, preparing trading account of previous year is GPR of previous year. You have every right to assume GPR of previous year is the GPR of current year. But sometimes the prices of previous year to current year may have changed. So in that case, what should I do, sir? Then you may have to make some adjustment to convert that GPR. How to do it? I will discuss later. Today, abnormality effect I will discuss, my dear friends. Okay. One more point I taught you in the previous class, my dear friends. In one question, so many special issues we learned. So each question or a special issues, if it is there, it's always good to write. Maybe 1 or 2 questions only I will write. So other questions when you solve special issues, every question you need to have some write-ups, my dear friends. After solving the solution, special issues have this question, you should write. Every question, don't expect me to spoon feed like this. one question, so many items are there, na, I will take efforts. That too only through this online recording I am doing it. Not in a face-to-face lecture I do. But anyway, that's okay, my dear friends. So coming back to this, I discussed one issue in the previous class. What is that? GPR means it is always GP on dash on sales. GPR means always implied to be gross profit on sales. But if the question very specifically says that it is GP on cost, like that given, you may have to convert that into GP on sales. Suppose it is given as gross profit margin 15% above cost. 15% above cost, 15% on cost, both are the same meaning only, which means it is 15 by 100 on cost, which is equal to 15 by 115 on selling price. Like that you should understand, my dear friends. Sir, why denominator numerator should be added? Illapa, common sense pa. 15 by 100 on cost meaning what? If 100 rupees is the cost price, 15 is the profit. If that be the case, what is the selling price? 115. About what is the profit by selling price? 15 by 115. Like that common sense you should be learning about that. Suppose in some other chapter, you need to calculate the margin from sales into margin to cost. So like that, how do you calculate? Very simple pa. Question says 30% on sales, 30% on sales. I need to convert in terms of cost. In this chapter it is not required. 30% on sales, directly I will apply 30% only. If some other chapter requires you to convert from sales into cost, how to convert? It is very simple pa. 30% on sales, 30 by 100 on sales. Percentage na 100. So denominator 100. 30 by 100 on sales. What is the meaning of that? Understand the meaning of these two numbers. If 100 is the selling price, 30 is the profit. So what is the cost to price? Appa should I plus? So you should know fourth standard formula pa. Selling price 100, profit is 30 na. Cost is less or more? Less. Appa naturally cost price is 70. So what is profit on cost to price? 30 by 70 is how you should be understanding. I hope you are following this. Like that you should know the simple common sense and all, my dear friends. Everybody should be already applied many times. You might feel this discussion is slightly insulting or boring. It's okay, because I want every one of you to bring that parity into understanding. Like that special issues discussed. One more special point I discussed in the previous class was if there is any undervaluation or overvaluation of the overall stock, it should be brought to the original cost price. So how do I bring? Suppose it is overstated by 20%. Overstated by 20% na, that amount minus 20% illa. That amount divided by 120 into 100. Like that you should be understanding. Suppose it is already valued less by 25%. Already valued less by 25%. Then what do I understand? This represents 75. What is 100? We should find out. I hope you are following this. Like that we discussed, my dear friends. Similarly, any goods that has been gone out, but it is not sales na, then such goods should be either deducted from purchases or should be shown in the credit side. Like that also I explained the special points in that particular previous problem. Capital expenditure, if any, should be eliminated. Like that, so many things we discussed in the previous class, my dear friends. This much only we have done, my dear friends. I told you last class 20 minutes recap, not today 15 minutes, the recap is over. Slowly, gradually it will reduce. When I take the next chapter, I won't recap this chapter. This chapter only when this, until the completion of this chapter. Every chapter minimum 6 to 7 classes na, at least 6 to 7 times recap na, it effectively strongly registered in our mind and it gives a lot of confidence for solving the problems in this particular lecture. Okay, so thereby you should really show some energy, my dear friends. You should only motivate in this particular scenario, in this environment. I know only those who are having so discipline will be sitting in front of such lectures. So thereby you should feel like I am there at your place and I am teaching to you. You should also assume that you are not alone. So you should not feel that as if I am giving you personal attention and all. You should feel everybody is sitting around you like that. It's all about assumption and creativity, my dear friends. So for some comfort and convenience, when they're just coming online to you, but a lot of creativity and discipline is very important, my dear friends. Anyway, proceeding further. So today, effect of abnormal items. In the meantime, every class I will give 1 or 2 problems as gift, my dear friends. The final answer of that particular questions I will tell in the last class of that topic. Then solution wise, you only should be solving completely. If possible, once you come to the Telegram group, you will be getting the solutions, my dear friends. So whatever unsolved here, for that solutions can be given, but mostly you won't require the solution because such an easy level question for which adjustments are already discussed, etc. and all will be gifted. Final answer confirmed. Final answer given, a CA student know how to arrive at the answer. So that is anyway there. But anyway, before you getting the final answer, you should have solved the problem, because I will be giving you the final answer only at the end of this lecture, my dear friends. I mean, end of 330 hours lab, at the end of that particular topic alone. Anyway, coming back to this, my dear friends, effect of abnormal items. Effect of abnormal items in the computation of GPR. We have already told you what is that. In the computation of GPR, effect of such abnormal items shall be eliminated. These items, abnormal items, effect should be eliminated. How do you eliminate? What is the need for elimination? First of all, I want the margin for the normal goods. If there is some abnormal goods means exceptionally few goods would have been sold maybe less than the cost price, or maybe more than the cost price, but may not be at the original selling price. It's not abnormal goods. Some goods which was normally purchased for 100, sold for 150. Purchased for 100, sold for 150. Sometimes no, I took one item, it was slightly damaged. I may be selling at a profit, but may not be sold at 150. I will tell slightly damaged. So you need not pay 150. Original selling price 150. I will sell it to you for 130, like that I would have sold. Sometimes I can't even recover the original cost price also. I may be selling less than the cost price. So when I say abnormal goods, it is not necessary that it should be sold strictly at less than cost price. It can be sold less than cost price or more than cost price, but it is not in a position to be sold at the original selling price, is what we are understanding. I hope you are following. Anyway, coming back to this. So if you have such items in the trading account items like opening stock, or in purchases, or in sales, or in closing stock, because we are finding GPR, all the 4 items will be there. If you have such items, effect of that items shall be eliminated. So my dear friends, to eliminate that, actually I have 2 approaches. It's only 2 approaches, means 2 type of presentation only. Both will lead to same answer. So it is not 2 different methods, I would say. It is not arriving at 2 different answer for 2 different assumption. It is just a 2 different presentation. So I have 2 different approaches, my dear friends. Though in the study module, we don't have separate discussion towards this 2 different approach, 2 different presentation, etc. But in various solutions, in one solution they practice one method, another solution they followed another method, but both will lead to same answer only. So I have named it. So just to differentiate this, like this theory not there. In the problem also they didn't specifically say this is so and so method, etc. So like this naming not there in the study module, my dear friends. I have named into 2 different methods, my dear friends, 2 approaches. One, we call it as restoration approach. We call it as restoration approach. The other one, we call it as complete elimination approach. One is called as restoration approach, the other one is called as complete elimination approach. So what is this particular 2 methods, sir? Restoration approach means what? Complete elimination approach means what? So before I write what exactly it is actually our own wordings, our own naming of such methods. If you look into different books, different study module also, like these 2 methods and all you don't see, my dear friends, but in questions you find it. So it's alternatively can be used. So we will discuss both the methods, and I will tell you, like in the examination you can follow any of the methods. So why don't you straight away teach us only one method, sir? Why to confuse us? See, dare enough to learn many things, my dear friends. When you have alternative, try to learn it. So whatever we feel like comfort, you can take that particular aspect. Why I am taking alternatives? Because study model, you take one solution, it is appearing like this. Another solution you find, you will feel that you, sir, have not discussed this. Actually not required, because you can follow same method and you can solve, because it will arrive at the same answer only. But you at that time you feel there is an alternative method, sir have not taught me, so thereby explore on all these things. Only thing is, when you have two different presentation in two different solutions, what is this, what is that differentiation, you should know. I created this theory. This theory you don't see in the study module, my dear friends. For that matter, nowhere we normally see such theories here. So proceeding further, my dear friends, restoration approach, complete elimination approach. What I will do is that I will demonstrate this restoration approach and complete elimination approach. What is that we will do? Finding GPR. The entire discussion is finding GPR. We will take opening stock, purchase, sales, closing stock. We will arrive GPS balancing figure and we will find out GPR. GPR is GP by sales into 100. In this, if you have abnormal items, how do you eliminate the effect? We should know eliminate the effect. Under two different methods, how we should do. I will demonstrate with the help of some numbers, and then we will jot down what we should be doing. I hope you are following this. Anyway, proceeding further, my dear friends. So let me take some numbers here. For example, opening stock. Opening stock 1,60,000. Purchases 9 lakhs. Sales 'll take some number. Sales is okay, 14,40,000. So sales is 14,40,000. Closing stock 94,000. Closing stock is 94,000. Anyway, so this is the information, my dear friends. Note. See, I always in the face-to-face classroom create some extempo numbers, because I want that flow of creativity should always be there. So I don't want to put every numbers into the workbook and keep it ready and all. So together some extempo numbers will be given, so that we can make it like pakka interactive, as if it's a pakka live session. So that impact should always be there. So that maybe slight 2-3 seconds that you find extra taking, so it's okay. You can you should be appreciating it, and you should be starting to enjoying it, or you should be adjusting it. So don't feel like, why don't you create the numbers before, etc. So there are usually people always would have written everything and then start explaining, etc. So I just want to create extempo numbers, that confidence I have, so that accordingly we will be explaining you the concept. So proceeding, my dear friends, it is like this. So it has been given like this. Closing stock includes certain damaged goods. Damaged goods costing rupees 20,000 and are written off by 30% and are written off by 30%. Like this one information. Compute gross profit ratio. Compute gross profit ratio. Now listen carefully, my dear friends. So this 4 information we take opening stock, purchase, sales, closing stock, and we'll arrive GPS balancing figure and we'll find out GPR. So like that we'll be proceeding, my dear friends. So we want GPR relating to the normal goods. So we don't want the abnormality should affect here. So we find this closing stock. So when you physically verify, you find some goods are not in a perfect condition. It is not that 6,000 is a reduction from the entire goods, it is a reduction from the specific goods. That is, goods costing rupees 20,000 was reduced by rupees 6,000. How do you know 6,000? 30% on 20,000. So goods costing 20. Original cost price I purchased for how much? I purchased for 20,000. And 30% of that particular 20,000 was written off, means when you valued the goods, you find that you can realize maximum this much only. Like that you have valued it. I hope you are following. So accordingly, goods has been valued. How much is the value at which goods has been taken? The damaged goods 20,000 cost price. Reduced by how much? 6,000. 30%, 6,000. What is the value of the goods? The 20,000 minus 6,000. It is 14,000. So you should be understanding this closing stock of 94,000. This closing stock of 94,000 includes damaged goods whose value is 14,000, whose cost price is 20,000. So in this 94, the amount is already reduced, yet to be reduced. They have already reduced. So it was originally costing 20 and are written off by 30%. Now the 94 already 6,000 was reduced. Understood? In the 94 damaged goods value included is how much? 20 or 6 or 14. In the 94 includes damaged goods whose value is 14. What was the reduction happened? 6,000. What if there was no reduction? What if this particular goods are perfectly okay? All the goods are normal. What would have been the value? The value would have been, if there is no damaged goods, all the goods are perfect condition. What will be the value? Think. It is 1 lakh. It is 1 lakh. Because some goods are damaged and the some goods alone we reduced by how much? 6,000, and thereby the value is 94,000. Understood? Can you give me the split up here? What is the breakup of 94,000? 94,000 have normal goods, damaged goods. Both the goods are there. What is the normal goods value? 94 lakh. 94 lakh. Normal goods is 80,000. How, sir? Because abnormal goods is 14,000. 94 lakh. Already 6,000 reduced. And 6,000 reduced from how much? 20,000. Abnormal goods value how much? 14,000. That 14 is already included in 94. Upon the 14 if you take, balance is 80,000. And the 80,000 is pakka dash goods, normal goods, good units. Okay, va? 80 plus 14, breakup of 94. Correct? Seri. Idella you should be understanding, my dear friends. Now proceeding further, let me demonstrate this straight away. Effect of abnormality should be eliminated. Effect of abnormality should be eliminated. Extremely sorry. Effect of abnormality shall be eliminated. So how to eliminate? So let me first proceed for the restoration approach. First let me try restoration approach. So I am preparing trading account of previous year. We have opening stock, purchases, sales, closing stock, gross profit. I will tell you now what is restoration approach. First of all, you should tell me, question says where this abnormality is included. opening stock, purchases, sales, closing stock. Where this abnormality is included? Sir, this abnormality is included only in closing stock. When you bought the goods, it was damaged or good units. When I purchased the goods, it was good units only. During this year, it got slightly damaged. So only when you found out the closing stock value, in that only you have identified damaged goods and you have reduced 6,000 rupees. Understood? So thereby please to understand. In the abnormalities there, in which goods, opening stock, purchases, sales, closing stock, all. Only closing stock. This abnormality is included. So in opening this goods, when I say is it there in closing stock, which means one more point you should be understanding is that it should be either in opening stock or in purchases. Correct? I am not telling it is there in damaged form in opening stock or damaged form in purchases. But this goods should be either part of opening stock goods or should be part of purchased goods. Correct? So please do understand, whatever goods you sold or whatever goods unsold should be either part of dash opening stock or should be either part of purchases. See, sir, no sir, it is not there in opening stock, it is not there in purchase. It is not like birth of the goods. So whatever goods that you have unsold should be either out of the previous year stock, old stock, or whatever stock that has been purchased in the current year. Understand? So you should be very clear, the closing stock should be either part of opening stock or part of purchases. Sorry, but in abnormal form, it is there in opening stock, purchases, closing stock. That goods in abnormal form, it is there in only closing stock. So this particular abnormal form before, it is there in normal form. And the normal form may be there in opening stock or may be there in purchases. You should be knowing. Understood? Sorry. Let us understand. Restoration approach means what? For the purpose of this chapter, for the purpose of computing GPR alone, not for accounts, you should treat them as if it is good units. You should treat them as if it is good units. So for this exceptional scenario alone, my dear friends, you should treat them as if it is good units. Like that you should be treating for exceptionally for this particular purpose. For accounting purpose and all, it was bad units, valuation and pakka correct only. But you should treat them as normal goods. That is what we call it as restoration approach, which means it has become bad units. You have already reduced by 6,000 rupees. Now, for the purpose of this computation alone, treat them as if they are dash goods, good units. That is called restoring. Restoring the normalcy is what we call it as the restoration approach. So, treating that abnormal goods as if they are dash goods, normal goods. If they are normal goods, what will happen? You would not have reduced, correct? Because they were abnormal, you have reduced by how much? 6,000. If they are normal goods, you would not have reduced, which means already reduced 6,000. What you should do? Add. So you have already reduced 6,000. So if you say it is not abnormal goods, you say it is normal goods, you should restore. What is restoring? Restoring means whatever you did because of it is abnormal, you restore the position. So what did you do? You reduced it by 6,000. What you should do now? Add by 6,000. So which means automatically you are treating them as normal goods. I hope you are following this. So thereby, no other place change because sales will opening stock or purchases. So it is there in what form? It is in normal form or abnormal form? It is there in normal form. It is there in abnormal form only in closing stock. So opening stock 1,60,000. Purchases 9 lakhs. Sales 14 lakh 40,000. This is normal form. Closing stock is 94,000. Now reduction, you are adding back whatever you have reduced some amount that you are adding back. This is called restoration. Restoring the abnormal goods as if it is dash goods, normal goods. So though something happened, you are now restoring the original position. That is what we are understanding. So I hope you are following. So thereby you add back 6,000. So what is the value? The value will be 1 lakh. So in that case, my dear friends, what is the gross profit? 14 lakh 40 plus 1 lakh, 15 lakh 40. 15 lakh 40 minus 10 lakh 60,000. It is 4 lakh 80,000 is the gross profit. So once you have to identify the gross profit, then gross profit ratio is 4,80,000 divided by 14,40,000 into 100. So if you take it, it is, what is the percentage? It is 33.33 percentage, or 33.13%, or 33.33 percentage. Like that you can understand, my dear friends. I hope you are following. Yes, so this is the way you should be taking, my dear friends. Okay. So this is how you will be arriving at the gross profit ratio of 33.33%. This is called restoration approach. But what do you mean by restoration approach? Restoration approach means treating that abnormal goods as if they are normal goods, which means if you have already made some reduction, that should be added back. So simple. I hope you are following this. Okay, so this is called restoration approach. Similarly, we have another approach called the complete elimination approach. Complete elimination approach. Study module, smallest level theory also not there, but straight away one problem is solved. Students know by solving the problem they will create some blind understanding. Left hand side like this, right hand side like this, and all they will understand anyway. So you need to really understand the concept. Very elaborately we are doing. So listen carefully, my dear friends. So what is complete elimination approach? As far as complete elimination approach is concerned, what is our primary objective? That abnormality should be eliminated. Effect of the abnormal good should be eliminated. So what is this complete elimination approach? Here, my dear friends, that particular abnormal goods should be completely eliminated from trading account. Abnormal goods should be completely eliminated from trading account. One approach is what? Restoring it, which means even though it has become bad, we are telling it is not bad. We are hiding that bad and we are telling it is dash good. It is normal goods. Abnormality now, we are completely removing that goods from the trading account is what we call it as complete elimination approach. Apo, what does that mean? It means, my dear friends, you know, that goods, some goods, though it is in abnormal form, is there in closing stock, it is definitely out of dash goods or dash goods. It is whatever there in closing stock, it should be out of either dash goods or dash goods. It should be out of opening stock or out of purchases. So I am not telling opening stock purchase, it is there in abnormal form. But this goods, whatever here we have, maybe some abnormal sales would have happened. Definitely that would have been either out of opening stock or out of purchases. So whatever we are understanding is that such goods should be eliminated from both the sides. That is what we call as complete elimination. One thing you should know, a particular item is there in credit, trading, other effect is there in the debit also. But we can't tell in P&L like the salary debit, other income in credit, like that we don't have. But here it is all about goods. Opening plus purchase the total goods. And the total goods would have been either sold or unsold. That's all. This is what you should understand. Whatever goods is there in opening stock should be there either in dash or in dash. It should be either in sales or there in closing stock. Whatever there in purchases should be either in dash or in dash. Either in sales or in closing stock. Suppose you have some goods in sales, it should be either in dash or either in dash. The old goods should be either out of opening stock or out of purchase. Like that you should understand. Correct? Apo, in the goods which is there in this closing stock in abnormal form, the corresponding effect is there either in opening stock or in purchases. We want that goods should be completely removed from the trading account. So I will make now one statement. What statement you know? To remove this, wherever whatever value included, that value excluded from that place. This is my trademark statement. So listen carefully, my dear friends. Wherever whatever value included, that value will be excluded from that place. What does that mean, sir? I told you in closing stock abnormality is there, and it should be there either out of opening stock or out of purchases. If the question doesn't say anything, normally we presume that it is out of purchases. Latest goods are damaged. Understood? Sorry. During the year, not at the time of purchase, during the year, After purchase it got damaged, thereby in the closing stock reduction was happened. Appo closing stock it is there in dash form, abnormal form. Purchases it is there in dash form, good normal form. Sorry. Appo purchases what value will be included? Original cost price. What is the original cost price of this goods? 20,000. Super. Now in closing stock it is there in dash form, abnormal form. So you already reduced by 6,000, which means valued at 14. So be very clear, my dear friends. Goods in closing stock it is included at 14,000, and in purchases it is included at 20,000. That is what I am telling. Wherever purchases and closing stock, whatever value 20,000 and 14,000 included, that value excluded from that place. 20,000 from purchases, 14,000 from closing stock. So what is included? That value excluded from that place. Understood? So it is not the same amount from both the sides. What value included here, that value excluded here. What value included here, that value excluded here. Understood? Like that one unique statement, my dear friends, which you can't find in the normal usage and all. So we'll create for our though it might appears to be funny, we'll remember that statement. So wherever whatever value included, you can repeat, so no problem. So you need not check like appa amma watching and all. So you can just open your mouth and respond with the statement. Wherever whatever value included, that value excluded from that place. Now this statement will be remodeled, modified, and people use it different places. So that item only will eat sir. So something like that, my dear friends. Anyway, so let us now proceed further. So it's called complete elimination approach. Wherever whatever value included, that value excluded from that place. So let us now proceed, my dear friends, into that presentation of trading account. Okay, so we have opening stock, purchases, we have sales, we have closing stock. My dear friends, our opening stock 1,60,000, and we have purchases, it is given as 9 lakhs, sales 14,40,000, and closing stock 94,000. This was the numbers, correct? Now we'll go for the simple elimination here, my dear friends. It is like here abnormal goods. So it is included reduced price, which is 14,000, and thereby it is 80,000. And here those same abnormal goods, though it is not including abnormal form, but it is the effect of abnormality. So abnormal, we call it as abnormal goods, but it was included in 9 lakhs at what price? Original cost price. What was the original cost price? 20,000. So why do you eliminate 20 here, sir? Because it was in good condition and 20,000 was included in 9 lakhs. What is included, that you exclude. Understood? It is not that this, sir, this goods is different quantity. 14 and 20, same quantity, different quantity. Same quantity, but different valuation. When I purchased 100 units, 20,000. Same 100 units, I valued at 14,000. Understood? Sorry, appo in the 20,000, I exclude, it is 8,80,000. Like that we take. So we arrive at the gross profit. It still remains the same, 4,80,000. This is what I told you. The sales also same, gross profit also same. So GPR will still be the same only. It's just the presentation only. 4,80,000. GP by sales into 100. So it is 33.33%. 33.33%. So this is how you'll be showing it, my dear friends. Okay. Now proceeding further. Okay. So 4,80,000 divided by 14,40,000 into 100, 33.33%. So we have understood two approaches, my dear friends. One is called restoration approach. Something like, no, see, when relatives are there and suddenly you committed something which you should not have committed as a student. So how your parents will react? Sometimes some parents will react in a manner because at least relatives are there, they will just close their eye and still treat you as a good boy, even though you did something mischievous, bad. But immediately your parents in front of big so much of crowded relatives, they will treat you as a good boy, as if it is called a restoration approach. You actually become bad. In their mind they want to beat you, they want to punish you, but they are just for temporary time treating you, okay, goodbye, only goodbye, it's okay, like that they are reacting. Sometimes what happen, they will tell, get lost here, get out, veliya poda, something like that they will respond, because complete elimination. So the same thing only, my dear friends, when you did bad, you are a bad boy. They can make it or they can advise you and make it a good boy. That is called restoration approach. It is unbearable, intolerable, so they will completely send you out, get out of the house. So like that different parents will react. The same way only we are also reacting, that these goods, my dear friends, has become bad, and accordingly treatment should be given. Now for this topic what I am telling, there are two approaches. One is called restoration. Treat them as if they are dash goods, normal goods. Elimination approach means send them completely away from the trading account. That good should not be there in debit as well as credit. It should be there in one place and don't tell. It is there in both the sides. So eliminate from both the sides. Understood? Restoration approach means in one side only it is there in abnormal form. So that place, what reduction you did, that you reverse it. So the moment you reverse it, you are treating them as dash goods, normal goods. So thereby you should be doing this. That is what we call as restoration approach, and other one is complete elimination approach. Correct? So I told you we are discussing about effect of abnormal items in the computation of gross profit ratio. Effect of such abnormal items shall be eliminated. Maybe you write one more time, effect of abnormal items shall be eliminated. There are two approaches for such elimination. One is called restoration approach, another one is called complete elimination approach. My dear friends, what is restoration approach? So it is nothing but goods will be treated as normal goods. Any reduction is reversed. Any reduction is reversed. Complete elimination approach. So which approach is very good, sir? It's just two different presentation, that's all. So thereby 5 minus 3, like that you take 5 minus 3 like this, one horizontal, vertical, whatever you may present, that doesn't matter, no. So thereby you can have any of the presentation, my dear friends. So these are if the moment you ask me when I tell same answer, two different way I can present, and if somebody asks me which presentation is good, they are still schoolboy. Then sir, whatever convenient to me, whatever comes to me naturally, I will apply that. That decision has to be made, judgment should be applied, correct? So thereby certain places you should show that particular level of maturity. This is not to be asked. If the moment you ask, you are a schoolboy and you have yet to come to the professional intermediate level, is what you should be understanding. So some maturity you should show. The moment you start using your own judgment, whether I should draw a line or not, which color pen I should use, from that level, the moment you come out, then the moment you start making judgment, then your self-confidence will be improved a lot. Even if a new adjustment comes, you know how to face it. Otherwise, every time, I don't know. That sort of approach will come. So that daringness should be there always. Complete elimination approach, my dear friends. Let me make that hallmark statement. So wherever, whatever value included, that value excluded from that place. Is it an English proper statement, sir? Absolutely no, but it is a statement for it to understand how what we actually do. So it is there in closing stock, it is there in purchases. So eliminate from purchases, eliminate from closing stock. What value, sir? Whatever value included, that value, correct? So whatever value included, whichever place, that amount should be excluded from respective side. So in fact, the value of that abnormal goods should be eliminated from both the sides, debit and credit. So in a normal statement, I can make it this way: the value of the abnormal goods should be eliminated from both the sides, but to the extent of the amount included in the respective side. Like that you should understand. So thereby, even though it appears a funny statement, but try to understand that particular statement. So in purchase, this is included; in opening stock, this is included; sometimes sales included. Sometimes it is not 2 place, it will be 4 place. So some abnormal goods is there in, suppose it was abnormality happened out of opening stock, and it is partially sold, and it is some part is there in closing stock. So which means you might understand that it is eliminated from sales. Sales is some value included, different value included in closing stock, different value in opening stock. So eliminate from all these places. So it is not always a 2 place, it could be 3 place, not always 4 place, it could be 3 place. So that way, please to understand, my dear friends. So that is why I said wherever. So maybe in sales, maybe in closing stock, maybe in opening stock. So all such places excluded is what we should be understanding. I hope you are following this. So more than the statement, the demonstration understanding is much better. Then you try to understand the statement. It's going to be a very easy approach. I hope you follow this. So now I taught you this. We are moving to the problem solving. So before that, the copying slide is like this. This is the first slide. Second frame. This is a question, an additional question that we are solving. Even though it appears like 26 question or so, some 3-4 questions extra we will provide, and it will be around always like 10% above the workbook questions. Already workbook very elaborately we covered, and then some extra questions I create for your better understanding, my dear friends. So proceeding. Restoration approach. Complete elimination approach. This is what we have done. Now just proceeding, my dear friends. We have done the previous class, my dear friends. So question 1 to 5 has been pakka completed. Question number 6 case A we have completed. Now proceeding to question number 6 case B. Question number 6 is primarily to find out the gross profit ratio. Case A we have completed. Proceeding to case B, my dear friends. Opening stock 73,500, purchases 3,98,000. Sales 4,87,000, closing stock 79,600. In valuing the stock at 31st December 2020, rupees 2,300 had been written off on certain stock. You know what happened? Okay. So it was opening stock 73,500, purchases 3,98,000, sales closing stock. In valuing the stock at 31st December 2020, rupees 2,300 had been written off on certain stock. Written off on certain stock which was having poor selling line. Having poor selling line means they could not sell it somehow. They could not penetrate in the market. They cannot sell it in the market. It is having a cost of 6,900. So they are telling, in valuing the closing stock, rupees 2,300 had been written off, already written off on certain stock whose having a cost of 6,900. Some goods whose original cost is 6,900 was already reduced by 2,300. Which means it is valued at how much? It is valued at 4,600. So it is having an original cost price of 6,900. It is already reduced by 2,300, which means it is valued at 4,600. So that is how you understand, my dear friends. So proceeding, you need to find out GPR. Maybe like later on you can find GPR in any of the methods, but at least this question we want to solve under both the approaches. So we need to find out GPR under both the approaches. So examination, should I do so? I will tell you one thing, in examination you will never get a question exclusively for GPR. You will certainly get question for claim only. So we are doing now one step of the 4 steps, out of 4 steps. So thereby you don't ask me like both the methods and all. You need to solve only one method, because you find out GPR, go to find out stock on date of hire, loss of stock, and then claim, my dear friends. So proceeding further. But this question, since we have already learned something, we want to apply in both the methods for our understanding purpose. So shall we proceed? Yes. You will solve. You need to take 5 minutes time under both the approaches. You need to arrive at the answer. Both the approaches you should arrive at the answer. Take 10 minutes. Welcome after 10 minutes. I hope you have taken 10 minutes. Now proceeding. So it is case B. So it is question number 6. Case B. So let me present, my dear friends, trading account for the year 2020, I think so. Trading account for the year 2020. So we have opening stock, and the first approach, okay, let me try the first approach here. It is a restoration approach. Though in the examination you can't use such words, just for the classroom purpose, since we are trying under both the methods, we are naming it as restoration approach. You need not name this in the examination for a solution purpose. So in fact, for the other problems when we solve, we don't name it and all. We straight away have one trading account. We do some operations, that's all. We need not explain like what is that method all about. Anyway, proceeding further, my dear friends. So it is opening stock, purchases, sales, closing stock. So it has been given like exactly the problem what I gave you as an example, that in valuing the closing stock, rupees 2,300 has been written off on certain stock having poor selling line, having a cost of rupees 6,900. So once again, bring the facts pakka. What was the original cost of that abnormal goods? 6,900. What was already reduced? 2,300. And thereby it is valued at 4,600. 4,600. So listen carefully, my dear friends. We don't have any problem with opening stock. We don't have any problem with purchases. We don't have any problem with sales. This abnormal goods in abnormal form is included only in closing stock. Like that we understood, my dear friends. Okay. Appo, this abnormal stock which is included in closing stock, certainly it is there in opening stock or in purchases. In which form? It is there in normal form. It is not in abnormal form. Abnormal form is there na, then we should do add back in that value also. So thereby please do understand, my dear friends, question says in valuing closing stock, goods costing 6,900 was out of that 2,300 was written off. It is in closing stock, it is there in dash form, abnormal form, but it is certainly there also in either dash or dash, opening stock or in purchases. In which form? Normal form. The point. Sorry. If nothing else is mentioned, it is there in opening stock or in purchases. Usual assumption is latest goods damaged. So thereby it is there in purchases. In purchases it is there in damaged form or good form? Good form. So which means it is included in reduced value or original cost? Original cost. Which means it is there in purchases at how much amount? Original cost how much? 6,900. 6,900. In closing stock it is included at 4,600. In purchase it is included at 6,900. Closing stock also you would have included 6,900 only if it was good units. Because it is damaged, you have already reduced by 2,300. This knowledge you understand. This understanding, pakka clarity about information you have na, takkani you will do. Restoration approach. Opening stock 73,500. Purchases 3,98,000. Sales 87,000. Closing stock is given as 79,600. Add back the reduction. 2,300. Reduction. So reduction you are adding back. Whatever you reduced, treat them as normal goods. Had it been normal goods, you would not have reduced 2,300. Because it is abnormal, you already reduced 2,300. Correct, Abba? Simply add back. Restore it. Treat them as if they are good units. You punished them because they were bad. How did you punish? By reducing 2,300. Now, undo the punishment. So, how to undo the punishment? Whatever you reduced, you reverse it back. Understood? So, it is 81,900 to gross profit. So, what is that amount? It is 97,400. So, we find gross profit is 97,400. Gross profit ratio 97,400 by 4,87,000 into 100. It is what percentage? 20%. Like this we should understand. I hope you are following this. Clear? Okay. Proceeding further, my dear friends. Okay. Case B, restoration approach. Like that we tried, my dear friends. So proceeding further. So now into second approach I will have. What is my second approach? Complete elimination approach. My dear friends, complete elimination approach. What to do? Wherever, whatever value included, that value excluded from that place. Now what I told, it is included in two places. Which place? One place it is very clearly given, closing stock. Another place either opening stock or in purchases. If nothing else is mentioned, I assume it as it is included in purchases. Sorry. In purchases it is above, finally we concluded. Wherever included, purchases and closing stock. Whatever value included, sir, purchases lo original cost of 6,900, closing stock reduced value of 4,600. Oh, about that value exclude from that place. So, my dear friends, we are presenting the trading account for the year 2020. We have opening stock. Opening stock. How much is the opening stock? It is 73,500. Two purchases. 3,98,000 the inner column minus the abnormal goods, which is 6,900. 3,91,100 then buy sales 4,87,000, buy closing stock 79,600 minus abnormal goods. Here what is included? 4,600 included. So it is 75,000 to gross profit.
97,400.
The same 97,400. So thereby gross profit ratio is equal to 97,400 divided by 4,87,000 into 100. It is 20%. Like this you should compute, my dear friends. So gross profit ratio 20%. So we have both the methods. I hope you got the pakka clarity. So one is called restoration approach, other one is called complete elimination approach. Understood? Seri. Henceforth we will solve only under any of the methods what you feel convenient. You can have one method, I can have one method, but anyway both of us should lead to different answer or same answer. Should definitely lead to same answer. It is just two different presentation. Copying slides, my dear friends. Question number 6, case B. Slide number 1. I hope you all understood. Slide number 2. So question number 6, case C. I want you to try, my dear friends. Please try the problem. Is question number 6, case C. Please try for 5 minutes. Arrive at the answer. Welcome after 5 minutes. You should have stopped the video. You should have completed this, and we are going to try this particular problem. My dear friends, when you try for 5 minutes, some students will arrive at some answer, some students will have some struggles somewhere. Now one thing is that in question number 6, case C, we cannot do restoration approach. Though we taught you two methods now. In question number 6, in case C, we cannot do restoration approach. We can do only complete elimination approach. You would have asked to the computer, why sir, why we can't do the restoration approach, why only complete elimination approach? Once again, what is restoration approach? Treating the goods as normal goods, which means whatever reduction made, that should be added back. Correct? Okay, listen carefully, my dear friends. So, if you take question number 6, case C, opening stock 73,500, purchases 3,98,000, sales 4,90,200, closing stock 77,300. Rupees 2,300 has been written off on certain stock out of current year's purchases, which was having poor selling line, it having a cost of 6,900. Here, in fact, last question we assumed the damages took place out of the purchased goods. The damaged goods in the closing stock may be out of dash or may be out of dash. Opening stock or out of purchase. We assumed it is out of purchase. In the question number case B, 6 case B. But here it is very clearly given the abnormal goods is out of the current year purchases. So doesn't mean that when you purchase itself you purchase for damaged goods. So that during the year the damages happen and it is out of the current year purchases. It is given out of current year purchases, which was having a poor selling line, having a cost of 6,900. A portion of these goods were sold in December 2020 at a loss of rupees 250 on original cost. Sir, which means this write-off of 2,300 did not happen at the end of the year. During the year, maybe 30th September and all, quarterly stock taking also will take place. At the time of stock taking, they realized that some goods has been already in abnormal form. And thereby they already decided that, so out of 6,900, we will not get 2,300, which means we have already written off 2,300 out of the total goods costing 6,900. But this happened during the year. Now what happened during this year, completion of this year, out of the damaged goods, out of that abnormal goods, a part is already sold. A part of the stock is already sold, which means abnormality is there in dash also. Sales also. Abnormality is there in sales also. So which means because certain goods are damaged and thereby it was not sold at the original selling price, it was sold at some price. Because the goods were damaged, because the goods were abnormal, it was not sold at the dash price, original selling price. If it is normal, it would have been sold at some original selling price. But it was not sold at original selling price, it was actually sold at a loss only. See, original selling price, definitely some profit should be there. No, it is very clearly given that it was sold at a loss of rupees 250. Nobody will buy and sell at a loss, pa. So please understand, because it is abnormal, it was not sold at original selling price. Suppose some abnormal goods has been already sold, and that sales amount includes even sale of dash goods, abnormal goods, and some part of the abnormal goods is there in closing stock. Correct? Now the problem is that why we can't do restoration. Sir, still I am not very clear. We are explaining some story. Why we can't do restoration? Restoration means I should, whatever reduction have taken place, that particular amount should be added back. Correct? Now, when I sold the goods, the abnormal goods I sold, I haven't sold a dash price, original selling price. Had they are normal goods, I would have sold at original selling price. I know that this damaged goods, which is a part of the goods which is having a cost of 3450, was sold at a loss of 250. Now, I know it is sold for 3,200. I know it is sold for 3,200 because it is having a cost of 3,450, sold at a loss of 250, which means what? It is sold at 250 more, huh?
No.
250 less, so it is sold for 3,200, correct?
Yes, sir.
It is sold for 3,200, correct? It is extremely sorry. It is sold at a loss of 250 rupees. It is sold for 3,200 because it is dash goods. Abnormal goods. It is because it is abnormal goods. It was sold at a loss. Had they been normal goods, restoration approach means what now? Had they been normal goods, at what price it should have been sold? Restoration means you should treat them as normal goods. If it is to be restored, then I need to know the original selling price. I want to know the original selling price. I know the original cost price. I know it was sold at a loss of 250 from original cost price. Just if it is not abnormal goods, which means if it is normal goods, whether I would have sold for 3,450? No, 3,450 is only cost price. Actually, I would have sold at a profit margin. Correct, Appa? So please do understand, my dear friends. So because it is abnormal, I didn't sell at selling price. I haven't even sold at cost price. I sold at a price less than the cost price. But had there been normal goods, I would have sold at what price? I would have sold at original selling price. Do you know that price? No, don't know, sir. Which means if you want to restore the normalcy in sales, I want to know the dash price. Original selling price, which I don't know. I don't know the real reduction that have taken place from selling price. I know the reduction that have taken place from the cost price. Correct, Appa? So please understand, my dear friends, in your trading account, you know these figures of opening stock, purchases and closing stock all should be at original cost price. Original cost price. Original cost price. If all goods are normal, correct, Appa? Sales will not be at original cost price. Sales should be at original selling price. If there is some abnormalities included here, which means some reduction have happened from the original selling price. If I want to treat them as normal goods, I need to know what was the reduction from not cost price. What was the reduction from? Original selling price. Do you understand my point? Which I don't know in this question. What if they give, like that you might ask, what if they give original cost selling price? If they have given original selling price, my dear friends, then I will not prepare trading account itself, because I know the original cost price, I know original selling price. Directly I will deduct, I will get profit, I will find out profit margin. Then the entire substance of the questionnaire will be lost. So they can't give you dash price, original selling price. And if they don't give original selling price, for me dash approach is not possible. Restoration approach not possible. That is why, because if some students see logics and all, then they feel like in one question institute do like this, in another question institute not doing like that. Why? This is the reason. I hope you are understanding this. So if the abnormality is there only in closing stock, maybe in purchase and opening stock also, no problem, then we can do under dash approaches, any of the two approaches. You can do restoration approach, you can do complete elimination approach, correct?
Yes, sir.
But if that abnormality is included in sales, then you can do only dash approach, complete elimination approach. You cannot do the restoration approach. Sir, why am I not in a position to restoration approach? Because I don't know the dash price, original selling price. Sir, I know 250 reduced from original cost price. I want to know what was reduction from original selling price. Do you understand the logic? Because we are taking so much of time here, because there will be one or two who take so much of time to understand this concept. Few know would have already understood the concept. Few will, that is why one way, second way, third way, in different angle I am teaching you, because I know that there will be like 100 different categories of students. And some students will understand in a different way, different angle only. So that is why different viewpoints I am explaining here, my dear friends. I hope you are following this. So that way, finally my conclusion. I could have actually told you one statement. Selling price we don't know. So thereby we should follow only one method. So we are spending time for you to get that concept, grasp the concept, digest the concept. So that is what we are doing, my dear friends. So I hope you understood this. Since we don't know the original selling price, we cannot do dash approach, restoration approach, but we can do complete elimination. Sir, how that is possible? Because we know at what value it is sold, what abnormal sales is included here. I know this abnormal goods has been sold for how much? I know it is sold for how much? 3,200. That amount I know. So how much included? I know. How much included in closing stock? I know. How much is there in purchases? I know. So whatever value, wherever included, I know. In that case, I can eliminate it. Understood?
Yes,
okay. So thereby question number 6 KC, the first lesson what you learn is that, so restoration approach not possible, complete elimination possible. So should I write like this? Question number 6 KC? No. You should write what statement? I won't write. You should write. What is the statement you should write in a box? That if the abnormality is there in sales, then the restoration approach shouldn't be attempted. It can't be done. You should do only dash approach, complete elimination approach. Shall we proceed? Yes. So that way we are trying question number 6 KC. Trading account for the year 2020. Two opening stock, two purchases, buy sales, buy closing stock. My dear friends, we find this particular abnormality is there in purchases, it is there in sales, it is there in closing stock. It means it is not there in opening stock, na? So we can directly take it. So opening stock. What is opening stock? 73,500. Opening stock 73,500. Purchases. It is given in the question how much? 3,90,000.
3,98,000.
3,98,000. When you bought the goods were in perfect condition only. Out of current year purchase, one word given, sir. That is what anyway we used to assume. The damages during the year happen is out of purchased goods. We used to assume in the question expressly given. It doesn't mean that the purchase amount is already reduced. You bought some goods for 3,98,000. Later on it become damages now. That will not be reduced from purchases because you have to pay 3,98,000 to the supplier, my dear friends. So thereby purchase value is the original value only. So please be very clear, purchase is what is included. Now the original value. What is the original value? 6,900. So abnormal goods order value 6,900. That way it is 3,91,100. 3,91,100. Now listen carefully, my dear friends. As far as sales is concerned, we will just have some working note here. Sale of abnormal goods. Cost price 3,450. Sold at loss of 250. Sale value 3,200. So we find the sale of abnormal goods is 3,200. So how do I know? Original cost price 3,450. Suppose it will be normal goods, now I would have sold at some price more than 3,450. But I don't know what is that price. They clearly told that it has been sold at a loss of 250 below the cost price. So we understand that abnormal goods sale is 3,200 and it is included in the total sales. Our total sales, we understand, my dear friends, is 4,90,200 given in the question. This includes sale of dash goods and dash goods. Normal goods and abnormal goods. From this, we should deduct sale of dash goods 3,200. So we should deduct it. So balance will be 4,87,000. So 4,87,000 is the normal sales. Sale of normal goods. Now, my dear friends, we have closing stock. In closing stock, what is given? So it is 77,300. So here also you should be really careful, my dear friends. 77,300. So please you understand, my dear friends. Closing stock of abnormal goods. This is a tricky calculation. Proper you should understand. Original cost, reduced value. My dear friends, when the original cost was 6,900. Original cost was 6,000. So this is reduced by. This is reduced value. The 6,900 was reduced by 2,300. So valued at 4,600. This is what happened. So 6,900 during the year was reduced by 2,300. Valued at 4,600. This is during the year they did. Not at the end of the year closing stock they did. This activity they did during the year. Understood? Seri. Ipo, a part of the goods sold is total damaged goods or abnormal goods. Then abnormal goods sold. We find that, my dear friends, it is 3,450. Abnormal goods sold, cost price is 3,450. Corresponding a sale value, how much I don't take. So in the goods already sold, I want to know what is closing stock. Closing stock of abnormal goods, cost price will be 3,450. What should be the reduced value in a question? What should be the reduced value is the question, my dear friends. So we understand that, listen carefully the calculation. 4,600 is a value attributable to how much? 6,900. What is the value attributable to 3,450? So that way we understand it is 2300. Like that we arrive. Actually, you can arrive, students we will tell 69 46 value sir. Now this is half of this. So naturally the 46 or a half is 2300. Like that value you understand. Correct apa? Inga so many times 2300 involved. Students will have a lot of confusion. That is why again and again explaining the calculation. So this 2300 I said this na no. There is no connection between this 2300 and this 2300. I hope you are following this. 6900 was valued at 4600. Idhila 3450 goods has been sold. As if this is a quantity pa. So remaining you have goods costing 3450 whose reduced value how much? It is still in damaged form or good form? Damaged form. Other whose value will be still 4600? No, it is 2300. A part of the damaged goods already sold. Total damaged goods are 46. So, adala part of the damaged goods already sold. Remaining part of damaged goods, how much value na? It is only 2300. So, like this calculation should be done pa. Because, sir, like this half often we can calculate, no? So easy, na? Every question like this they will not tell. In some other question, no. Total goods 8000. Total goods 8000. They reduced it by say 3000 rupees. They reduce it by 3000. The value is 5000. The value is 5000. This is total. Adukapram sale was, my dear friends, sale of the damaged goods. This is cost price reduced valued. Reduced value. Suppose sale, my dear friends, was actually 6000. Sale was 6000. Now closing stock. How to find out? How to find out? So we understand 5000 is the value attributable to 8000. What is the value attributable to 2000? So like that you should find out. It will be how much? 1250. So what is the formula there? It is 5000 divided by 8000 into 2000. Like that you should arrive. When you see different numbers, better understanding come. But unfortunately that was the question given the study module, so I am using the same numbers, my dear friends. So you should not get confused with different numbers. So 6900 was valued at 4600. So in the 69 3450 was sold. Why you don't reduce any value here? I don't want to reduce that sale value here pa. I want to know out of this reduced value how much is attributable to balance closing stock. Understood? That is not determined by the sale price. Suppose this goods costing 3450 was actually sold for 5000 rupees. I can't have closing stock negative. Understood? So thereby the sale value is no relevant here. So what you should do? You should find out closing stock cost to price, and accordingly you find out what is the reduced value of the closing stock. Understood? So 4600 is the value attributable to 6900. What is the value attributable to? 3450. That way we are getting 2300. So I just showed an alternative, different numbers, my dear friends. Another, one example we have taken here. This is not connected to this above question. Only for explaining 2 times I have taken 2 different numbers. I hope you understood. Anyway, coming back to this. This closing stock includes damaged goods at what value? 2300 minus abnormal goods 2300. So it is 75,000. 75,000. Now listen carefully, my dear friends. Now you arrive at the gross profit. It is still 97,400. It is 97,400, and thereby gross profit ratio will be 97,400 divided by 4,87,000 into 100. It is 20%. Like this you should understand. I hope you are following.
Yes, sir.
Okay, so my dear friends, so it is case C. First conclusion, what you would have written a box also, that if the sales includes abnormality, then dash is not possible, restoration method is not possible, only complete elimination possible. What is the logic behind? Because original selling price is not known. So that is the concept. Understood? So like this you should try, my dear friends. So case C over. So case C order copying frame is what I am providing. Okay. So we have elaborately taken and made you to understand these concepts, my dear friends. Now let me proceed for another discussion here. We have just understood treatment of abnormality in computing gross profit ratio. We have just determined the treatment of abnormality in gross profit ratio. Now we want to understand the treatment of the same abnormal goods in the memorandum trading account. So we now so far discussed what? Sir, last year trading account when we prepared and when we compute GPR, suppose abnormality is there, now what I should do? Suppose the same abnormality is there in the current year of fire. So far discussions previous year. Now in the year of fire, 2 trading account you prepare, no. One trading account is for finding GPR. Another trading account is for finding stock on date of fire. So in that trading account, if you have abnormal goods, what to be done? So treatment of abnormal goods in the computation of stock on date of fire, that is in the memorandum trading account of current year. Let's title that. Treatment of abnormal goods in the computation of stock on date of fire. That is in the preparation of memorandum trading account. In the preparation of memorandum trading account. So my dear friends, I am proceeding here. So we prepare memorandum trading account. So what is it so far we have done? So one thing we can now create a uniform practice here. What is that? So we have 2 options. One is restoration approach, the other one is complete elimination approach in GPR. So now we are going to have consistently complete elimination approach. What are we going to follow? Complete elimination approach. Let us now henceforth follow complete. Why do I follow like that? Because, sir, complete elimination can be followed unconditionally. But if you have abnormality in sales, I should not follow dash. Restoration. So which means some cases I can follow both, and in some cases I can follow only one. Which one? Complete restoration. So which means in all cases, let's have only one method. Which method? So henceforth, in any other question that we solve, we are always going to follow complete elimination approach. But a student solving under restoration approach, wherever it is possible, I don't have any issue. But henceforth, in our classroom, we are going to solve only under complete elimination approach. Shall we proceed? Yes. So we will do that. Number 1. Number 2. We are presenting the memorandum trading account. In the complete elimination approach, what we do? Whatever value included, we will exclude from that side. So what value included, that value will exclude from that side. Sales included 3,200, we will exclude from that. Closing stock include 2,300, we will exclude from closing stock. Like that, whatever value included in whichever place, that value excluded from that place. Okay. Here, listen carefully, my dear friends. Their abnormalities eliminated and ignored. Abnormalities eliminated and ignored. Suppose in the current year, opening stock or in purchase or in sales or in closing stock, we have abnormality. We will first eliminate it from normal goods. We'll eliminate it from and we will show it in a separate column. We'll show it in a separate column. Understood? So we'll eliminate from the normal goods column and we'll show it in the separate column is what we are going to do. I hope you are understanding. So listen carefully. Sir, I have not understood. Okay, let me demonstrate you. What does that means? So when you prepare memorandum trading account, my dear friends, rain. It's raining outside. Memorandum trading account. When you present, we will have two columns. It is normal goods column, abnormal goods column. Normal goods column, abnormal goods column. So in the question will give consolidated information, total sales, total opening stock, total purchases. We know that includes normal as well as abnormal. So we will eliminate abnormal from the total and show it in the abnormal goods column. Understood? So that way we'll eliminate the abnormal from normal and we'll show it in a separate column. Okay. So second question is like, no, you might ask, so why sir? Why do you want to have separate column? Eliminate, no sir. Please understand, my dear friends, when you take this opening stock, when you take purchases, we have sales, we have closing stock, when you arrive at gross profit. What are we actually finding in this memorandum trading account? Profit. The memorandum trading account, what are we going to find out? Stock on date of hire. Now listen carefully, my dear friends. The insurance, whatever we have taken, cover all goods. It is not normal goods alone. Just because it is slightly damaged doesn't mean that insurance immediately not applicable. Insurance will definitely be compensate me actual cost price. But if I am losing the cost price due to fire. But even if fire does not happen and because of that I am going to lose some amount, that insurance company will not compensate. The statement what I told you would not have understood. Listen carefully, my dear friends. I have already told you that I purchased for 500 cost price. Intend to sell for 700. Intend to sell for 700. Now last, what is the claim? Destroyed by fire. What is my claim?
500.
500. This was the original selling price. Correct, Appa? 500. It is slightly damaged. Original selling price is 700. Original selling price is 700. But damaged. Expect to sell for 550. Expect to sell for 550. I will recover 550 if I sell this product. Why? Because it is damaged. So it is lost. What is my claim? 500. Because I paid money for this goods. How much? 500. If I lost only 500. You should not tell I wanted to sell for so much, so I lost future money. No story like this. So you purchase for 500, that only you can lost. I hope you are following this. So listen carefully, my dear friends. I purchased for 500. Original selling price 700. It is damaged. It is damaged. Expected to sell for 450. Now this goods lost. This goods
Lost.
claim
450.
450 da. Because if fire did not happen, you would have got how much money? 450. That much only I can compensate. Which means anyway you will lose 50. You purchase for how much? 500. So here only you are telling, if fire did not happen, I would have sold for 450. Apo I lost 450. Here you are telling. Apo here also, if fire did not come, I would have sold for 550, sir. I would have sold for 550 na. Then 550 only you should compensate. No. I will never give you the profit margin. You incurred cost of how much? 500. So if you sell, you will get 550. Now you would have got a profit of 50. Correct? Na? But According to me, when you lost, the suffering is only how much? The 500 rupees. Your future profit margin I can't compensate. But in this scenario, what happened? You purchase it for how much? 500. No doubt you are losing 500. If the goods is lost, no doubt you are losing 500. But anyway, even if fire did not happen, you would have lost 50. You would have lost 50 even if fire did not happen. Correct? But thereby I am telling I will give compensation only to the extent of 450. But the point what I am telling is that I will give some money for the damaged goods. Understood? But need not be a dash price. Cost price. Thereby I want to know what is the value of dash goods and what is the value of abnormal goods. Both are subject to insurance. But both may not have same valuation. Understood? So thereby I wanted to know when I find stock on date of hire, what is the stock of dash goods? What is the stock of dash goods? Stock of normal goods and stock of abnormal goods. That is why I told about the abnormality should be eliminated from normal and show it in a dash column, separate column. Why do I need separate column? Because I want the information. But when I find out gross profit ratio, I want only normal ratio. There is nothing called separate ratio for abnormal goods. There I told eliminate and ignore. Here I am telling eliminate and show it in a separate column. You understand the logic behind all this discussion? Very elaborately we are taking, my dear friends. So thereby try to catch all these points, my dear friends. So very deep understanding we are providing. Sometimes so much of discussion might give confusion, but show the patience, I will simplify all these points to you. So listen carefully. So thereby, there eliminate and ignore. Here it is eliminate and show it in a separate column. This is what you should do. So that is what we are trying, my dear friends. So that we will find out the closing stock as stock on date of hire representing normal goods as well as abnormal goods. Total these two values. So this is the total stock we have on the date of fire minus dash. Salvage value. Minus salvage value, you will get loss of stock. That is salvage value retained. You will get loss of stock. Then you will go for computing claim. Understood? As far as once again, treatment of abnormal goods in the computation stock on date of hire. Very simple. Abnormal goods shall be eliminated from normal goods and show it in a separate column. And find out the stock on the date of hire. Like that you should be taking. I hope you are following this, right? Okay, so this is how you should be doing. So treatment of abnormal goods. So I already taught you, I have given you, my dear friends. So what is the point you should be writing? The point is abnormal goods eliminated and shown in separate column to find out stock of both normal goods and abnormal goods on date of fire. Abnormal goods eliminated and shown in separate column to find stock of both normal goods and abnormal goods on the date of fire. Understood? Now listen carefully, my dear friends. So please apply little bit of more of common sense here when you, because school level, some books, some authors will do what? Ultimately it's a computer, it's purely mathematics. It's a statements we have to attach to the insurance company to demonstrate how much stock I had on the date of fire. These are the working sheet to present it. Like no, this is not continuation of the trading account what you prepare. Trading account is something you prepare only to find out GPR. GPR for dash goods. Normal goods. The trading account what you presented. Step number 1 GPR you present trading account. So whatever workings you did there. So based on that you need to prepare memorandum trading account. Understood? There you followed a restoration approach and thereby what should be the value here? There is actually no connect between the trading account and memorandum trading account. That is a worksheet you presenting for finding out dash GPR and this is a worksheet you are presenting for finding dash stock on date of fire. So both are like independent statements. See the real business, in the real business 1 year trading account will have connect to the next year trading account because closing stock is equal to opening stock, etc. Now this is not like a continuous statements, my dear friend. These are two different sheets, two different workings for finding two different items. The first working is for finding GPR. The second working is for finding stock. See, some maturity when you show, you will have a better understanding, my dear friends. I've seen 90% of the students who follow study module solution and they create absolutely some different understanding. I don't know how those understanding can come. Listen carefully. The point what I want to tell you is that, see, some books, some authors will ignore this column. Ignore which column? Abnormal goods column. You eliminate it and you present this only memorandum trading account only for dash column. Normal goods. That is only one column, rupees column, and which is representing normal goods column. And in a separate statement type, you try to find out like, we did one working here, like this you present one working. You can easily find out closing stock of dash goods. Abnormal goods, like this one table you can present. This is sufficient to find out dash. Closing stock of abnormal goods. This table is sufficient to find out closing stock of abnormal goods. Understood? We don't want to find out profit of abnormal goods, loss of abnormal goods, purchase of abnormal goods. We want to know what is the closing stock of abnormal goods. Correct? Correct? So thereby, yes, we wanted to know only that much. We wanted to know only closing stock of dash goods. Abnormal goods. We are not at all concerned with this opening stock, purchase, profit margin, etc. and all. We are concerned with only with this amount, closing stock of dash goods, which can be found out by preparing like this one table. Total goods, this much sold, balance this much, corresponding value. That value you can calculate separately, and if you have only one column for dash normal goods, in which you find out closing stock of dash goods. To this you will add separately whatever you have computed here. Do you understand?
Yes, sir.
So which means the closing stock of abnormal goods you can found out by preparing this within the memorandum trading account, having the second column, or you can do in a separate working. Understand? So please don't be rigid sir, what I should do. So this is common sense. So if you are not understanding this as a common sense, I will tell you throughout this topic, this is going to be slightly difficult. Very first chapter, it's going to be difficult. Why is that? People are not ready to accept their common sense, trying to use their common sense. You understand? This is only maths to find out, say this 100 units I had, 70 units sold, 30 units, what is the value? I actually wanted to know what closing stock of dash goods, abnormal goods. In fact, for that matter, normal goods you can present statements. There is no necessity, mandatory requirement that you should present dash. Trading account. For that matter, any trading account for that matter. Understood? All these things are simple common sense application, my dear friend. So, opening stock plus purchase the total goods. From that, cost of goods sold deducted, a statement form. You will get closing stock. Do you understand?
Yes, sir.
So, people teach you in a very rigid manner, like draw line, draw straight line, draw perpendicular line, then two columns. Nonsense. So, what you should do? You should understand common sense here. So, for structure, what we are presenting is that having two columnar, throughout we will present like this because most of the solutions presented by institute have two columns. But there are some, why institute is so sometimes not so consistent, because institute would have picked the questions from different authored books, and in one authored book that author would have shown two columnar approach. Another authored book, that author would have taken that in a separate working note. Do you understand? So that way you should apply the common sense. So there is nothing called which is correct. Both are correct. It's not leading to two different answers, my dear friends. It is leading to same answer. It's all about two different presentation. Now these are the places where a student can't use judgment. Student who are always comfortable, like sir, teacher will solve one problem, then teacher will change the number, then the student will solve same problem. Student will tell, I understood the concept. Rubbish, nonsense. That's not the way you should be understanding. You should have understood the real concept and then use the judgment. Say, this is a two different presentation, and I am not going to ask the teacher which of the presentation to be followed. I will use my judgment, and I will, to the extent possible, we will recommend you that you follow the institute solution. So when we say institute solution, even institute have different presentation in many problems now, then majority of the times which presentation institute have followed or that presentation we will recommend. That's all. I hope you're following. So thereby in the memorandum trading account, the effect of abnormality is eliminated from normal and show it in a separate column. And should I show it mandatory in a separate column? No, you can find out separately in a statement form total goods, goods sold, balances, closing stock. Like that you can find out closing stock of dash goods, abnormal goods, and which we can later on add to closing stock of normal goods and find out total stock on date of hire. Ultimately, stock on date of hire should consist of dash goods and dash goods. Normal goods and abnormal goods. Understood? So that's the way you should be taking, my dear friends. So we have told you how to present this, and I already this was actually explanation, like what be the claim, etc. Why is that I should have separate column? Because both will not have same valuation. The moment it is abnormal goods, it might have a possibility that it might be less than the original cost price. It may be less than the original cost price. It may be less than the original cost price, but normal goods always should be a dash price. Original cost price, normal goods should always be at the original cost price, whatsoever be the selling price for that matter. 500 sold, to be sold for 700, to be sold for 600, to be sold for 550, only 500. But abnormal goods, suppose abnormal goods also can be sold for more than cost price. Sir, if it can be sold for more than cost price, can I say it is abnormal goods? Maybe yes, because it may not be sold for original selling price, but it can still be sold at a profit margin. Then it will be still at original cost price only. See, I am not telling always abnormal goods should have some other price. Even abnormal goods can also have original cost price. But only if the abnormal goods can be, it will represent different price only if we expect to be sell at a price less than cost price. Exactly. So how these concepts will be very clear, my dear friends. So abnormal goods can also represent original cost price. Normal goods should always represent original cost price, purchase price. Do you understand?
Yes, sir.
Never at dash price, selling price, never at selling price. It should always be an original cost price. Understood? That is how we are just conveying, but abnormal goods might have different prices. So that is how we should be considering. And this abnormal goods determination can be in a separate column. We were actually not focused about profit relating to dash goods, abnormal goods, purchase of opening stock of abnormal goods, etc. Chumma completion we do all these things, but otherwise we are so focused on this computation of abnormal goods, closing stock. Understood?
Yes, sir.
Okay, so now what we will do, we have so far discussed this. We'll apply this discussion in a problem and we'll experience it, right? Okay, so listen carefully, my dear friends. So we have completed already question number 6. Question number 7 we'll do later. So question number 5 completed, 6 we have completed, 7 we will do later, 8 we have gifted to you, Pakka gift, and now we are going to try question number 9. We have to try question number 9 here. From the following information, compute the amount of claim under loss of stock policy. Sum assured 50,000. Sum insured. Accounting year is calendar year, Jan to December. From reading only, take the facts, what should strike your mind. Reason for damage due to fire accident on 30th June 2020. So fire year is 2020. What is the previous year? 2019. Value of salvage stock 5,800. Salvage value 5,800. Stock on 1/1/19. Previous year opening stock 73,500. Previous year closing stock 79,600. Purchases 3,98,000. Sales 4,87,000. Purchases from 1/1/2020 to 30th June 2020 1,62,000. Sales from 1/1/2020 to 30th June 2020 2,31,200. In valuing the stock at 31st December 2019, rupees 2,300 had been written off on certain stock which was having poor selling line, having a cost of rupees 6,900. In the previous year, when the closing stock was valued, the goods costing 6,900, of which 2,300 had been written off. A portion of these goods were sold in March 2020, in this current year, not in the previous year. In the current year, a portion of this goods has been sold at a loss of rupees 250 on original cost of rupees 3,450. The remainder of this stock was now estimated to be worth its original cost for the purpose of claim. Subject to above exception, gross profit had remained at an uniform rate throughout the year. At a uniform rate throughout the year is the question. They already told you compute the amount of claim under loss of stock policy. You are supposed to compute the amount of claim under loss of stock policy. So let us proceed, my dear friends. Okay. Question number 9. So please understand, fire had happened in year 2020 and they are asking you claim for loss of stock. So naturally what we will do, we will first focus on GPR. Looking into the question, I find GPR is separate information not given. So we will prepare trading account of previous year. We found that in the previous year closing stock some abnormalities included. Whether the abnormality is there in previous year sales? No, it is not there in previous year sales. It is there in previous year closing stock, in valuing the stock on 31/12/2019. So thereby it is not there in previous year closing, previous year sales, it is there in previous year closing stock. How many approaches possible? 2 approach or only 1 approach? How many approach? Both the approach possible. So should we solve the problem under both? No. We will follow one method. So which method? Complete elimination. Let's henceforth be uniform. Sir, I like restoration. Please do. Absolutely, I don't have issue. So you can do any method, right? So based on that, our answer is going to be different. You do one method, I do one method, different answer. No, same answer only. I have already demonstrated that if both the methods possible, then definitely answer under both the methods will remain the same. So you can follow any of the methods. Since I don't want to make a decision is it possible or not possible. One thing I know, complete elimination, anytime, any problem possible. So thereby I will proceed under complete elimination approach. Correct? Sorry. For complete elimination, the facts are like this. In valuing the closing stock, goods costing how much? Goods costing 6,900. Reduced by how much? 2,300, which means valued at 4,600. Valued at 4,600, which means this abnormal goods is there in closing stock at what price? Abnormal goods is included in closing stock, already included in closing stock. At what price?
Original cost.
4,600 reduced price, not original cost price. This abnormal goods is already included in the closing stock. At what price? At the reduced price. They have already written off how much? 2,300. It is already valued at 4,600. In closing stock, what is included? 4,600. Sorry. In the closing stock line, the abnormal goods is there. Maybe out of opening stock or maybe out of purchases. So nothing is mentioned, sir. Nothing is mentioned. Out of opening stock or out of purchases? Out of purchases. In purchases, it is included at what value? 6,900 original cost. When we go for complete elimination approach, whatever value included, that value excluded from that place. So from purchases, we will deduct 6,900 and from closing stock, we will deduct 4,600 is how we are going to proceed into this question. Okay, it is already done, which was actually solved through that previous problem. So question number 6 we have done. So let us take that. It is question number 9. We are taking trading. First step is GPR. GPR. Trading account for the year 2019. Should I have two columns here? No. Abnormal items will be eliminated and ignored. We just want to eliminate from the normal. That's all. Minus it. So deduct it, eliminate it. In trading account, I won't have two columns. Okay. So we will just proceed. Trading account for the year 2019. We have opening stock. Do we eliminate anything from opening stock? No. How much? 73,500. Purchases. So purchases. What is the purchases amount? 3,98,000. Minus abnormal goods 6,900. 3,91,100. Buy sales 4,87,000. Buy CSK
79,600 minus 4,000.
Abnormal goods 4,600. So you should be knowing that in closing stock it is included in abnormal form, for which already 2,300 reduced. Then 2,300 should be added, no? So then I will call it as restoration approach, which I will do only in closing stock. Then I won't do anything in purchases. Correct? Here we are doing complete elimination approach. Complete elimination in closing stock, what value included, that value excluded. What value included? 69 or 23 46. What is included is 46. That will be excluded. So thereby it is 75,000. So to gross profit,
97,400.
it is 97,400. 97,400, my dear friends, is the gross profit. So thereby gross profit ratio. Gross profit ratio is equal to 97,400 divided by 4,87,000 into 100. It is 20%. I hope you understand. Please calculate, my dear friends. Experience a calculation. Understand the concept. Think. Maybe like stop the video for some time. Think and then hear the lecture again. Maybe one more time. Maybe redo it. So try to understand the concept, my dear friends, all of you. So that way is what you should be doing. Even if it is nobody here, I am asking like all of you, because I presume so many of you are there with me. So we got this gross profit ratio as 20%. Now proceeding for the second step. Second step now I will do in both the ways, my dear friends. So like it's a different presentation, not two different methods, two different answers. Later on, don't ask me, can I do like this, can I do like this? When I teach you two different methods, which means you can follow any of the methods. You can follow. Right? So let me show you finding stock on date of hire. Step 2 is stock on date of hire. Okay. First, finding stock on date of hire, my dear friends, we prepare memorandum trading account. For 1/1/2020 to 30th June 2020. Memorandum trading account 1/1/2020 to 30th June 2020. So listen carefully, my dear friends. So we'll take it one by one. It is normal goods, abnormal goods. So as far as normal goods is concerned, to opening stock, you can easily understand from the previous working. You know 79,600 had abnormal goods. You excluded the abnormal goods, which is having a value of 4,600. So what is the remaining 75,000? What is 75,000? The value of the normal goods. So opening stock will have a value of 75,000. 75,000 is the original cost price of the normal goods. What is the value of abnormal goods? The value of the abnormal goods is 4,600. So we find that previous year some goods has been damaged, goods costing 6,900 whose value was already written off by 2,300. So which means that particular goods has been valued at how much? 4,600. That is what included here. We have excluded that amount and we have shown normal goods value as 75,000. Correct? So listen carefully. So memorandum trading account opening stock. What is the normal goods value? 75,000. What is abnormal goods? 4,600. So whose original cost is how much? 6,900. Already reduced by 2,300. This is the opening stock. So that way just proceeding, my dear friends. Here is what some students used to ask me. What doubt they will ask? Sir, instead of this elimination approach, I did a restoration approach, sir. So which means I added 2,300 here and I took here as 81,900. And here I did not do anything because purchase no restoration. So I will take 398 and I get same answer. Same answer I got 97,400. So restoration approach, I told you, same answer only. If you go and take this question number 6 case B, we find both the approaches, same answer we will be getting. So if I do like that, then here I should be writing how much, sir? 6,900 or 4,600. Some students was asking. First of all, what you do there and what you take here are not connected, or not at all connected. So please do understand, my dear friends, this is a separate working for finding dash gross profit ratio. This is a separate working for finding stock on date of hire. What you do there and thereby it is to be reflected here. Nothing rubbish nonsense statement. I hope you are following. So thereby there is absolutely, don't worry about what you do there and thereby you should do here. Nothing like that. There I added and thereby here also addition amount should be shown. Nothing like that. Here you show the real value. The real value as on opening date is how much? Abnormal goods length. Maximum recovery expected is how much? 4,600. Suppose you expected to recover 7,600. Now I would have shown here how much? 6,900, not 7,600, because I'll be showing the goods only at original cost price. Understood? So that is the point. So generally goods will be reflecting only dash price, original cost price. Only we expected to realize less than the cost price. We'll be showing that price. Understood? So that way, as on the opening date, and the abnormal goods or the value is how much? 4,600. As on the opening date, abnormal goods or the value is 4,600 because goods costing 6,900 already reduced by 2,300. So thereby value is 4,600. Understood? Now listen carefully, my dear friends. Two purchases. During this year 2020, we didn't have any abnormal goods purchases and all. So it is 1,62,000 is the total purchases. 1,62,000. We didn't have any abnormal goods purchases. Then we are having, my dear friends, sales. By sales. As far as sales is concerned, my dear friends, it's been very clearly given that 2,31,200. This 2,31,200, does it include abnormal goods? So it is given that last year some write-off took place. No. Out of that goods, out of the damaged goods, a part of the goods was sold in March 2020. That's the current year or previous year? Sir, March 2020 is the previous year. Here we are not following financial year, we are following calendar year. So March 2020, 2020, year of hire. Current year, a part of the damaged goods was sold. It is sold for how much? Question says, goods costing 3450 was sold at a loss of 250 na 250 less than 3450, which means what is the sale value? 3200. So sale of damaged goods is 3200 is included in the total sales. So 231,200 includes normal goods as well as abnormal goods. Adala what is abnormal goods sale value? 3,200. So thereby what is the sale of normal goods? 2,28,000. So like that you should be understanding. Takka faster follow up. So 2,31,200 is the total sales. In that sale of abnormal goods is 3,200. What is the sale of normal goods? 2,28,000. Like that you should be posting, my dear friends. But it will be better that you have a working for that also, my dear friends. So maybe below this memorandum trading account you can show the sale of abnormal goods, cost price 3450, loss 250, sale value 3,200. So that way we find that 3,200. So this is 2,31,200 minus 3,200. So it is 2,28,000. 2,28,000 is the sale of dash goods, normal goods. And abnormal goods is 3,200. So that way we have taken. Now listen carefully, my dear friends. We have gross profit and then we have closing stock. Here is the place you need to be really careful. So listen. We have done step number 1. What is step number 1? Step number 1 is to find out gross profit ratio. This ratio is for total goods or normal goods or abnormal goods or normal goods. So apply this ratio only for the normal sales. So 2,28,000 into 20% is what you should apply. 2,28,000 into 20%. It is 45,600. It is 45,600. So that we have taken in the normal goods column all items except closing stock, which we can arrive as balancing figure. So we can show that as balancing figure. So 75,000, 1,62,000, 45,600. Add all these items minus 2,28,000. You get this number. What is the number? You should calculate and see. No, you can simply copy. Please calculate. It is 54,600. 54,600 is how we are understanding, my dear friends. So proceeding further, it is abnormal goods column. No, abnormal goods column la we have not taken gross profit and closing stock. Here is the place, my dear friends. This closing stock is not going to be balancing figure. You have to calculate closing stock. We have to calculate closing stock. So listen carefully, my dear friends. We have separate working for closing stock of abnormal goods, for which I have already presented at the table. What was the table? It is cost price, reduction, value, total abnormal goods 6,900, 2,300, 4,600. Understood? Sale 2,000, sale goods costing 3,450 has been sold. What is the closing stock? 3,450. What is the corresponding value? 2,300. Now listen carefully, my dear friends. Goods total costing 6,900. Adala part of the goods 3,450 has been sold. So remaining goods or cost is 3,450, whose value is 2,300. Goods costing 6,900 was valued at 4,600. Goods costing 3,450 was sold. Appo remaining goods order cost price 3,450. Other value 2,300. So listen carefully, my dear friends. This is what I would have taken here. 2,300 is the value I expect from the remainder of the abnormal goods. This is the value I expect from the remainder of the abnormal goods. Understood? Now, but listen carefully, my dear friends. Inga oru twist irukku. There is a twist happen. What is a twist na? See, we had goods costing 6,900, goods costing 6,900 reduced by 2,300. During this year, goods costing 3,450 was sold. Correct, Appa?
Yes, sir.
Very, very important statement you see. The remainder of the stock, this stock, damaged goods, remainder of the damaged stock was now on the date of hire, was estimated to be worth its original cost for the purpose of claim. So this entity, business entity, makes a strong claim that the remainder of the goods is now worth its original cost. Means what? The remainder goods having a cost of 3,450. If they can sell this goods as on today, they would have certainly realized 3,450 or more. 3,450 or more. But even if I realize 4,000 also, but insurance I can claim only original cost. Understood? So that way, my dear friends, this statement is going to be the twist in this particular problem. So because of this statement, I could not take the 2,300 as a value. I should be taking how much? 3,450. We should be taking how much? 3,450. So I am taking here 3,450 and not 2,300 purely because of the statement. If this statement is not there in this question, I would have taken this value at how much? 2,300, because already there is a reduction took place and that reduction will be continued to exist even on the date of claim. I hope you are following this. So thereby, just because of claim comes now, I can't change. It is just because of the improved market situation, and the entity, even though had a huge reduction in the original cost to price, but still when the actual sale took place, it did not incur that much loss. 6,900 we expected a loss of how much? 2,300. 6,900 we expected a loss of 2,300. That is why we valued this at 4,600. But when this 3,450 actually sold, it was sold only at a loss of 250 rupees. So thereby, we now believe after some number of months, the remainder of 3,450, when we sell, even this 250 loss also we will not get. This 3,450 can be sold for either 3,450 or maybe at a higher price. Like that we are telling, which means we are telling the insurance company what is lost by fire is 3,450 and not 2,300. I hope you are following this. So thereby, in this particular question, this working is not required. Because since the statement told that the remainder of the goods is now worth its original cost, and thereby straight away will be taking the value of 3,450. I hope you are following this. For examination purpose, in the working I won't do. I will directly take 3,450. Understood? This is how you should be understanding the point, my dear friends. Now listen carefully. For formality sake, I can arrive at this particular gross profit margin and all, my dear friends. So it is how much value it is? What is it? 3,200, 3,450, 6,650. So here it is 4,600. It is 2,050 as the balancing figure. You will be taking. This is how you should be understanding. I hope you are following. Sorry. Now listen carefully, my dear friends. Low efforts I am taking for you to understand the concept. Please understand the concept pakka. So here I would have taken only how much? 2,300. Why I am taking 3,450? Because the question gives one statement. What is the statement? The remainder of the goods is now estimated to worth its original cost. Like that it makes a statement. In the study material, they could not explain all these things. I explained for the last 20 minutes. No. When I explained this particular 20 minutes, this concept, this much discussion cannot be given in a big theory there. So what institute module have taken here is that instead of writing here 4,600, they took 6,900, which is the original cost. They took how much? 6,900, which is the original cost. Why they have taken original cost 6,900? It is because, my dear friends, at the time of claim we are making original cost a reduced price. Original cost. Appo, it will be very easy to explain also to insurance company that this is a part of 6,900. Otherwise, no, telling insurance company it was 4,600, and that is why it is now reduced to like suddenly why then it has become 3450 question and all will come. Thereby, institute have taken the number instead of 4,600 as 6,900. So again, sir, which is correct, sir? 46 or 69? Please understand, pa. I am actually not worried about you writing here ABC. Here you write XYZ. Here you write PQR. Ultimately, I want 3450 as a number, which is directly I derive from the question. That's all. I hope you are following this. So I am least worried about what number you write here. This is this accounts? Is this profit correct, sir? We are not preparing the statement to find out the dash. Profit. It is the statement to find out stock. Stock or the finding of abnormal goods is to be independently done. Whether you prepare this column or not preparing this column, you have to separately do the closing stock determination. I hope you are following this. So thereby, after me solving this problem, some students will tell in my study module, I find this as 6,900. Can I write 6,900, sir? Because again they will bring out the argument like, no, because I did restoration approach, thereby I want to write 6,900. Don't create some wrong understanding by looking into solutions. Try to understand the concept, all of you.
Yes,
My dear friends, had it been that two lines not given, those two lines not given, na? Which two lines? The lines that now the value is original cost. So the remainder of the stock is now estimated to be worth its original cost. Statement not given. Now, how much value would have been here?
2,300.
Uppo, definitely I should write only how much? 4,600 here. Understood? Sorry. Because at the close of the year it is 4,600. At the close of the year it is original cost. Instead have taken as how much? 6,900. So I recommend the students either you go with 6,900 or 4,600. No problem. Because there is no mistake in it. So only thing is you should mention very clearly it is original cost. It is original cost. Now if you write 4,600, you should tell it is book value. What institute have done? Writing here 6,900 and put a star mark and say that book value of that goods is only 4,600. Like that they have put a star mark. Book value of this goods. In the ledger they took how much? 69 or 46? 6,900, and they are telling book value of the goods is only how much? 4,000. In the books actually it is 4,000. Real value is only 4,600. But for convenience we are taking 6,900. Institute put a asterisk mark and they have just provided explanation. I hope you are following. But students will create wrong understanding. No. Original cost should be there. Now here most of the students will have one doubt. Original cost is reduced value. I would say, if the value is already reduced, you should be taking only dash value. Reduced value. If the value is reduced, it should be reduced value, pa.
Yes, sir.
Understood? So thereby, for the purpose of explanations, you show 6,900 and all. So don't take 6,900, my dear friends. So what institute followed, I am not following here. Why? Na? In some other question, if this statement is not there, which statement? The stock is now worth its original. That statement is not there. We are going to have another few questions like that. If that statement is not there, then I cannot correlate this opening and closing value. Correct, Appa? In such problem, I have to take this only a dash value. Reduced value. I will not take original cost. Understood? So, if you still want to follow module solution, then I will tell you one stand. What stand? Na? If the closing abnormal goods at a reduced value, na, opening you show at reduced value. If the closing stock is going to be shown at original cost, na, then this also you convert into original cost. I repeat the statement. If the closing stock of abnormal goods is going to be valued at original cost means, then you can have a separate original cost column here. Understood?
Yes,
but if you don't, if the closing stock is at reduced price, now here also you can show it at reduced price. Understanding? So this is one stand. There is another alternative, sir. No confusion you can avoid. How? Don't have column for abnormal goods. All this confusion you can avoid by not having a column for abnormal goods. Straight away you find only 54,600. Later on, when you find a stock on date of hire, separate through working note, you find a closing stock of abnormal goods. Respond.
Yes, sir.
Anyway, this number you are not going to change based on what number you write here, pa. Based on this number, profit or loss number will change, pa. Based on this number, stock will not change. Stock is to be independently found out, correct, pa? So anyway, ignore this column and you have it as a separate working note. Understood?
Yes, sir.
So I am explaining you what and all is there in the module and what and all variety of ways institute have solved solution in RTP, in study module, etc. And everything is correct. Everything is correct. Understood?
Yes, sir.
So your mind will feel comfort to one thing. So you can follow the comfort, which is more correct and nothing is there. So I'm just telling you 3 presentation now. What are the 3 presentation? One is ignore this column. Have only one column. Which column? Normal goods column. But eliminate the abnormal goods item. And separately find out the closing stock of abnormal goods. This is one presentation. Another presentation is what? Sir, opening show reduced value only. Closing depending upon the question. If nothing is mentioned, closing dash value. Reduced value. If this specifically says that it is worth original cost, that value. Suppose the question says that no, it is not that reduced value, it is not original cost, it is some other value, not that some other value. Understood?
Yes, sir.
Sorry. Third scenario, my dear friends. If this is original cost, opening.
Original cost.
If this is reduced value, opening.
Reduced value.
That's all. What are the 3 things I have told you so far, my dear friends? One is don't have separate column for dash. Abnormal goods. Don't have separate column for abnormal. All confusions will be avoided. Sir, second one is have separate column for abnormal goods. Have separate column for abnormal goods. Right? In that, show the opening only at reduced value. Show the opening only at
Reduced value.
closing at what value? Depending upon the problem. Depending upon the question. Question silent, na? Reduced value. Question silent means reduced value. Question says that it is worth original cost or original cost. Right? I the second. Third. Depending upon the closing stock, fix the opening stock value. Understood? Based on this, profit or loss will change. Based on the profit or loss. Anyway, we are not going to tell what is the profit or loss of that particular year to the insurance company. So ultimately, we want to find out the stock on the date of hire, and we are going to use only these information for the purpose of computing a claim for loss of stock, not the profits. Understood? That way you should be trying, my dear friend. I have spent plenty of time here, plenty of time. So stock on the date of hire by preparing memorandum trading account. So many presentation confusion, sir. I would have created now by giving you many solutions, because most of the class follow one solution. And they least bothered about students coming across another solution, they get confused. I have actually created initially confusions by telling you all types of solution, and then I given you clarity also. I hope you be now very clear with that particular different variety of presentation, and you follow only one presentation. I hope you are following this. Shall we proceed? Okay. So I have also already told you the reason why it is 6,900 in the study module for that question, and in some other question they don't take 6,900, they take the reduced value itself, because the closing will be a dash value. Reduced value. In that case, opening stock you also find reduced value. Since the closing was at original cost, they are also taking opening at original cost. In some problem, instead have not taken this column. Is it okay?
Yes.
It's okay. It's okay. Understood? The clarity is there now? Super. This is how you should be taking, my dear friends. Anyway, proceeding to the third step. What is third step? Loss of stock. Loss of stock. So it is stock on date of hire. Normal goods. 54,600. Abnormal goods 3450. Should have been 2,300. should have been 2300. Why is it 3450? Because question says that the remainder of the goods is now worth its original cost. So it is 58,050 minus salvage value. Salvage value 5,800. So 52,050 is the stock, loss of stock. 52,250, yeah.
Yes, sir.
52,250 is the loss of stock. Step number 4, claim. Step number 4, claim. Policy amount is rupees
50,000.
50,000. Now you understand, first of all, it is partial loss.
Yes, sir.
It is not complete partial loss. We will always presume that the agreement contains average clause. It is also underinsured. It is also underinsured. Stock is underinsured. Thereby, claim applying average clause will be how much now? Loss of stock into policy amount, sum insured, divided by stock on date of fire, which is 52,250 into 50,000 by 58,050. Both the stock to be taken 45004 is how you should arrive at the answer. Other steps all better. So, on the memorandum trading account, confusion is only because of different presentation exists, and you be aware of all the presentation. Follow any presentation convenient to you. Sir, I don't want to have this column. I am comfortable by taking 3450 separately, sir. No problem, no problem. Sir, I want to take institute solution, take 6,900 here. And I will take 3450 correctly here, sir. I want to change the profit or loss. I want to have the profit or loss exactly matching with this institute solution for that question alone. Some other question, it will have different presentation. Institute have not followed rigid rules there. Understood? So then you can have no issues. Absolutely you are correct. Understood? For me, on the date, the goods were actually having reduced value original cost. At the beginning of this year, original cost reduced value. Reduced value because previous year it was reduced. Now that it is becoming dash cost, original cost. I will take only the actuals. If you ask me, I will take only actuals. I will stick on with this. You have some other presentation, no problem. I explained all the three. It is not that I don't know. I have explained you all the three. Understood? And accordingly, you feel comfortable. No rigidness that I will create, like you should follow only this, nothing like that. So all the three will be getting marks because it's application of common sense. It's not like this is the only way how to present. Understood?
Yes, sir.
Okay. So I will just show this copying slide here. So much of things we have explained today. The abnormality in GPR computation, abnormality in the stock on date of fire, memorandum trading account. So this is the copying slide, the first one. Okay. The second one, second frame, 1, 2, stop the video, copy. The third frame, maybe overlapping, it's okay. Copy. I told you in this problem, you know why this table is not required, because straight away they told it is cost. That is why I took 3450. If I have to arrive at the reduced value of 2300, then this table is relevant. Okay. So first I told you this should have been the value. That's 2 lines not there now. The value would have been 2300. That you should be knowing. Loss of stock. Claim for 45,004. Understood? Pakka? So, my dear friends, question number 10. Question number 10. Gift. Question number 10. Gift of this particular lecture. So, I am providing question number 10. You should solve this particular question. Okay. Actually, 11 is also gift. 10 to 11 you try. Let me see whether I can present. 10 to 11 you should try. before you start the next lecture, maybe like one day later you are trying this lecture, I don't know continuous or not, but before that 10 and 11, without even any smallest discussion, without seeing the next lecture, you should have completed this 10 and 11. That is how you gain in confidence, my dear friends. So it is not only words change, so the overall situation change. So thereby, please try the question number 10 and 11, and we will meet in the next lecture, my dear friends. In all probability, substantial portion will be completed, because this was the heaviest part. I need to take so much of discussion. Other things, only small concept in each of the problem, we can easily complete, my dear friend. Totally 16 question or so. To the extent possible, we will try to complete. Maybe here small segment pending, one more class, 1 hour we require, right? So thank you. We'll meet in the next lecture, my dear friends.